Good evening. Dan Fitzpatrick here, stockmarketmentor.com. And look, the market's in sell-off mode. I'll just look real quick at this. If I can pull up the ticker. You can see we've gone from, hell of overextended to right back at the 50-day moving average. Typically, you like to see pullbacks to the 50-day moving average, but you don't like to see implosions to the 50-day moving average. This is not your typical sideways consolidation, sideways to down move, and then finally the 50 catches up to it. 50-day moving average did not catch up to, to this chart. The price chased the 50-day moving average like a dog chases a bus, and the bus had to stop right at the corner. Boom. And so I would expect this to take a while before we get any kind of a move higher. But what I'm actually seeing is I'm seeing some solid trading, some solidifying, so to speak, in support on a lot of the home builder stocks, and also gold, GDX, not General Dynamics, GDX, the gold miner stocks, where they haven't really sold off. See, look at the difference, like in this test here. This test here, the 50-day moving average versus, say, this one. Like, this is super steep. This one, super steep. Tesla, hello, right? So we know this, but on some of these, like the home building stocks, they're just kind of drifting lower. Lennar, Toll, DHI, we go on and on. They have, we've been stopped out of our positions on these for for one of them a 20% profit, but the others slight profits or slight losses. But so we're out of these, but I really feel like they're starting to set up to give us some different entries. But if you look at the gold stocks, I'm looking at these as almost kind of a right here, right now situation. We can see on the GLD here, it's pulled back. It's gradually drifted sideways, lower highs, but basically sideways, while the 50-day moving average has had a chance to catch up to it. So we're kind of at an inflection point here where what we're looking for are higher prices. So I look at this, and then I start looking at some of the gold stocks, and one that some members in the forum mentioned this morning, I call it wampum. I don't know why. Maybe it's my Native American background or something, but it's Wheaton Precious Metals here, WPM, and if you look at today's low, it's 49.66. So, like this is where the price is. This is where the low is, and if we just kind of move this sideways, we get similar support right back here. This well above the 50, this basically below the 50. So this is a defined risk trade where you're buying the stock here, and your approach is that you can see the stock, if the rest of the gold sector moves, you can see the stock starting to break out, move out of this. What could basically kind of turn into is like a long handle. This would be the cup, this type of thing here. And then you got a really long handle. By the way, another way you can look at it, and this is like kind of using fractals, I guess you could say, but you could say, well, actually, this is the cup here, and then this is the handle here. Or we could say, well, wait, this was the cup here, and this was the handle, or this was the handle. You see my point? In a lot of different time frames, we're seeing the same thing. So I like that type of thing, because what it shows is a stock that's got good buying and then a healthy consolidation, then good buying and a healthy consolidation. So right now we're in the consolidation part, and it's been going this way for quite a while. And so I think you buy the stock here and then keep your stop just a little bit below 49.66. That gives you a defined risk trade. You're risking, say, 7%, and so the number of shares you buy is the number that matches your maximum acceptable risk. If I take a 7% loss on my position, what does that amount to in dollars? Okay, well, how many shares do I buy so that if I do take the 7% risk, I don't exceed my maximum loss? That's how you got to be doing it. You can't just be trading this stuff by gut instinct and feel. I tried that for many years, and it worked great when the market was awesome. And when the market wasn't awesome, it absolutely sucked. And so only when you start having a specific process that you can apply will you really grow as a trader. So this is kind of meeting my process because I've got a defined risk on a stock that's showing a base here. So anyway, you might try that. We added a few different stocks to the growth stock list for premium members. One thing, recently we had a big influx of members because of a marketing promotion that we did on our new fast track orientation. It's like a series of 30 videos that you get that really help you get through the trading process very quickly as you join Stock Market Mentor. Let me just tell you real quick, I'm doing this at the end of the video, so if you don't want to hear this, shut me off. It's not personal to me. I won't know about it because I don't know you. But the way I'm trying to structure Stock Market Mentor is this, in really 3 different groups of advancement. First thing, you're going to come and you've got to get a foundation of trading. That's what I'm trying to share with you as far as trends, entries, and testing, or I should say tracking your trades, developing a process. That's your foundation area. You can't do anything until you've done that. And then I'm also focusing on growth, which is helping people learn how to hold their winners longer, cut your losers short, how to concentrate your portfolio rather than diversify. Diversification is for suckers. Sorry, it is. By the way, diversification is a relative term. Diversifying among 20 stocks, you're guaranteeing mediocrity into your account. You just can't help it. If you're diversifying in 2 stocks, that's kind of risky. That's pretty ballsy. So somewhere in the middle there is the right amount of stocks to hold. I'm qualifying this because I don't want to piss off a money manager, which I've done before, who says, like, what are you talking about? You're dogging on me and I'm trying to do the best for my clients. My point is, I'm focused on telling you what you can do to make your profits grow. And then the last is, so we've got foundation, we've got growth, and then the last part is acceleration, where you're really learning how to focus on your trading tactics, maybe incorporate options, and really grow your portfolio in the way that you know you can. So I would suggest, if you haven't tried option or Stock Market Mentor, or Option Market Mentor for that matter, give it a shot. First 30 days is free. The worst thing, the thing that you could lose, the worst possible thing that could come from it is you've spent all this time listening to me yammer over the next month and you haven't gotten anything out of it. My bet is you're going to do better than that.